Hello guys. Last 2 days the S&P 500 is down a lot, so the people is start to fear, and then they start to think, is it the bear start to attack the market again? Will we going to be like having the February and March the market crash down? So today we're going to look at the overall market condition, and then we see is it the bear attack the market or not. So first one is we're going to look at the SPS. Okay, you can see that the SPS from the high to the yesterday close is about, I think, down about 4.5%. So yesterday candle was a very nice pin bar. So we're going to look at, is that will be like the February the market will all the way crash down, or the market will just bounce from here. So we're going to use some indicator. Let's say we're going to use a Fibonacci. Let's see how it's work. So from here, I, oh sorry, from here to here. Okay, so you can see that on the top the market actually pulled back until this one yesterday. The low of yesterday is about 61.8 Fibonacci, then it start to bounce up again. So I believe that this pin bar is support with the Fibonacci level, and there is a very strong pin bar. So okay, we try to drag our Fibonacci to down again. So maybe I drag until here. See what's that which level. Okay. So if I drag until this level from here to here, then you can see that the Fibonacci, the price actually retreats to Fibonacci 38.2 level. So this is also a support. So I believe that this pin bar is quite strong. Okay, it's support with the Fibonacci. Of course, we cannot only look at the Fibonacci. Let's try to look at any other thing. Let's look at my moving averages. Okay, remove the Fibonacci. It's a bit messy. Okay, if you look at the moving averages, this blue is 20 EMA, purple is 40 EMA, then the blue is the other blue is a 50 moving average. So you can see that the price actually retreats until the 40 EMA, then it start to bounce again. Then with the Fibonacci level support, I think the price will be start to bounce back, or the if the price continues to go down, the most can go is about in the 50 level. Let's look at our Fibonacci again. Let's look at Fibonacci. If the price continue to go down, I think the price will go into the 60 50 level. Yeah. If the price continue to go down to Fibonacci 50 level, will be about a 50 moving average here. If the price continue to go down again to 61.8, it will be around here. Yep. So the price might be bounced from the 50 MA if it continue to go down, and then if break up below 50 MA, then will be the next level of support will be 3209. Yeah. So this is S&P 500. Let's look at another one. Okay, this is Dow Jones. Okay, you can see that Dow Jones, right? It also bounced at the support of the stay in the support of the 20 EMA, and then it's also making a very nice beam bar. So try to add the Fibonacci, see which level of Fibonacci it is. Be from here to here. Yep, the price yesterday low is also 50% Fibonacci. So if let's say the price continue to go down to 61.8, yeah, this could be the next support. If price continue to go down, if continue to go up, then it will be making the all-time high again. So you can see that this is also, it's not really considered a beam bar. Yeah. Okay, after Dow Jones, let's look at the next step. Next step is also a very nice beam bar. Okay, we try to add in our Fibonacci, see which level is it. Oops. Okay. Next step is bounce from the 61.8 very nicely. So if we add in the moving averages, okay, next step is also bounce from the 50 MA. So next step is a very strong, and then the beam bar is a very nice bullish beam bar. So I believe the next step is very strong as well. Let's look at another one. This is Russia 200. Okay, so this one, okay, we can see that it's not really a beam bar, but it's bouncing from the 50 MA. So we try to include our Fibonacci, see which level of the Fibonacci is from here maybe to here. It's a bit messy. Let me take out my moving averages. Yes, a bit careful. From here to here, the top, you can see that the price actually also bounced from the 38.2 level. Yeah, it's not really a beam bar this one. So it's also bounced from some of the support. So by looking at the overall market, I will say that the market is still very bullish, and then all bounce from the Fibonacci support level. And then besides looking at the market, we will try to look at any other things. Okay, we'll look at a mega. I will not look at Fang because Fang, I feel that Netflix is not as strong as Microsoft. So we're trying to look at the mega, Microsoft, Amazon, Google, Apple, and Facebook. Let's look at the first one, Microsoft. Okay, Microsoft, the price is breaking the resistance and come back, then resistance turn into the support, is also in the trend line supporting. This I believe is more like a doji candle, so I think it's very strong level now. Can try to add in some if you want. Yeah, so Microsoft is still very strong. Let's see moving averages. Yes. Microsoft is also in the blue one, the 50 moving average cross above the 50 moving average. So Microsoft is still very strong. So next one is what? Google. Okay. Google recently break the resistance, making the all-time high. Then now we choose is also a support equal to resistance. And then if you look at the moving average, it's also about 50 moving average, then bounce back. So Google is also is still the very strong. Apple. Apple recently they just split their stock. I think if you look at the Apple is bounced on the 40 EMA, but the chart of Apple is a bit gappy. You can see here gappy. Here is the chart is a bit gappy, maybe due to the stock split. So I still feel that Apple is very bullish here because if it go down more, it may go down to 50 MA. Yeah. So let's say it's 50 MA. Yeah. Let's see which level of Fibonacci. Okay, 50 MA is about the 61.8 Fibonacci. Actually, the price yesterday it go back up is in about a 50 level Fibonacci. Between 50 and 61.8, then it go back up. If Monday open as a bearish, then it may go down to 61.8. Is also is around the 50 MA. Yeah, it will continue to go up. So it's still very bullish. Amazon, one of my favorite stock. Okay, Amazon recently break resistance, then break above, then now come down. So it's in the support equal to resistance. So I think it's also, yeah, can say it's in the trend line. Yeah, stay in about the trend line. So it's also quite strong. So Amazon is still very bullish. If you look at the MA, yeah, Amazon bounced from the MA. This is also I think can be considered a bullish beam bar. Yeah, it's a very strong bullish signal. Yeah. So the other one is what? Facebook. Facebook, obviously resistant, break, then now support, reach pin bar, stay around 20 EMA. I feel that Facebook price is still very high. If you want to buy, it's not the right time to buy. I might wait for the Facebook to go down a little bit more. Yeah, maybe to this level, 50 MA will be good price to buy. It's also a gap equal the gap out, then the gap sometime will equal to the support also. Yeah, if I want to buy, I will wait for Facebook price to come down to here. Yeah, so let's add in a few more. Yeah, around here, 61.8, also around 50 MA. Yeah. So by looking at the this mega, all these five biggest stock in the market is telling me that they are still very bullish. They are bouncing from some of the support level as well. Okay, so we trying to look at, okay, this is from finviz.com. So this is a 1 day performance, yesterday performance of overall. If you are in USA, then you are still on Friday. For me, I'm in Singapore because this is Saturday morning already. You can look at the 1 day performance. Interesting is the all these big five. Microsoft is only down a bit. Apple is break even. Google and Facebook is red. Amazon is a bit red. Then I found things is the banking, JP Morgan, Bank of America, Wells Fargo is very green. Means that the market maybe start to retreat from the technology into some other sector like maybe bankings or any others. Yeah, bankings is green. Yeah, insurance also is a bit green. Yes. So this is 1 day performance. It's not that red. I believe the market is still very bullish. This is just a healthy retracement. By looking at the 1 week performance, Microsoft is minus 6.4%. Then the rest are still acceptable, is still not that red. Then the banking industry is slightly green. I think it's almost break even only. Yeah. So by looking at the 1 week performance, the overall market is considered a healthy pullback, so it's not that red. Yeah. So here I conclude that the market is just in the very healthy pullback. The S&P is just a very healthy pullback, so it's not that bad already attack us. I believe the market will not like the February down so much, so maybe it will continue to go down a little bit more, then but it will start to bounce again.